Hello there, welcome to another video on investing on the stock market. Today we're doing semiconductor stock showdown. If you like today's video, hit subscribe. Any questions or suggestions, drop me a comment. So today we're pitting the top dogs of the semiconductor industry up against each other. We're doing Intel Corporation, Samsung, Broadcom, Texas Instruments, Micron, Nvidia and Taiwan Semiconductor, all of the good stuff. AMD didn't make the list, too small of a company, and it's very similar to Nvidia. Qualcomm had to step aside for Broadcom. Broadcom has shown a stable stock price history. Qualcomm is just all over the place and isn't really moving anywhere. So as always, we'll be looking at the following numbers. How much has the revenue grown over the last 5 years? How much money is the company actually making on its revenue? How efficient is the company? So how much expenses does the company have to pay to maintain its current operations? Return on equity, which is how much money the company is making with the money you're giving them. And earnings per share, which is how much revenue they have per outstanding share, which is a metric we use to value the stock. So some pretty important numbers, but I would say these two are definitely the ones to keep your eye on. So without further ado, lean back, relax and enjoy this stock showdown. Starting off with the top competitor in the semiconductor space, Intel Corporation, with 63 billion in revenue and 15.7% market share of the global semiconductor space. Grown revenue by 18%, quite low, but it's a massive company, keep this in mind. 15% net margin, decent. 16% cash flow, 14.2 return on equity, that's a great number, but only 2 earnings per share. So pretty lukewarm numbers out of Intel. Moving on to another massive company fighting out of Korea, it's Samsung, with $174 billion in revenue and 11.7% market share of this industry. 16% revenue growth, quite low. Only 11% net margin, 12% free cash flow, 8.6 return on equity, but 142 earnings per share. So apart from this last number, pretty low numbers. I'd expected more coming out of Samsung. Moving on to another US corporation, it's Broadcom. 13% revenue growth, only 9.6% net margin, 31% free cash flow though, so not too many expenses, 8.6 return on equity, and 4 EPS. So again, quite lukewarm in the middle numbers coming out of Broadcom. Moving on to another US corporation, Texas Instruments. I'm loving the name. 16% revenue growth, 24% net margin, incredible number. 31% free cash flow, also low expenses, 35 return on equity, and 3.6 EPS. So these are by far the most impressive numbers so far coming out of Texas. Now moving down the list to some of the more exciting companies, the fan favorites. Moving on to Micron, you have to save the best for last. 41% revenue growth, 25% net margin, 36% free cash flow, 32 ROE and 4.4 EPS. Now these are some really strong numbers coming out of one of the fan favorites, Micron. And moving on to one of the hottest stocks over the last couple of years, the king of the stock market, maybe the fan favorite, Nvidia. One of my personal holdings, I hold shares of Intel Corporation and Nvidia. 42% revenue growth, crushing Micron. 31% net margin, 30% free cash flow, 46 ROE and 4.8 EPS. These are some ridiculous numbers. Nvidia is quite a large company, not the biggest semiconductor company. I mean, it's only doing 9.7 billion in revenue, and it doesn't really have any significant market share of the semiconductor space. Now I forgot to mention that Micron has 6.9 billion in revenue, Texas has 13.6 and Broadcom has 13.2 billion. And Broadcom has about 3.8% market share, same with Texas, and Micron has about, and so these three stocks companies have about the same market share of the total semiconductor industry. Moving on to the last and maybe the dark horse in this race, Taiwan Semiconductor Company. This is one of the fan favorites. A lot of you asked for this company, so I'm doing it. 87% revenue growth. Now this is a smaller company, keep that in mind. It does about 32.6 billion in revenue, 35% net margin, ridiculous, 22% free cash flow, 26 ROE, and only 0.4 EPS. But some really impressive numbers, especially the most important ones in my eyes, which are 5-year revenue growth and net margin. So here we are, and by the looks of things, we have, for the revenue growth, it's with a big margin, TSM going for the victory there. We've got TSM also having the highest net margin. Looks like Micron is going to take the free cash flow, Nvidia takes the ROE, and Samsung takes the EPS. So I would say the numbers are most important, going from here and down to the least important ones. So today's winner, guys, has to be Taiwan Semiconductor. There's no other way of putting it. Nvidia and Micron coming in at close seconds, but these are some crushing numbers. So I own Intel and Nvidia. Why? Intel is the biggest player, the safest in my opinion. It pays a great dividend of like 3.2%, and I look at it pretty much as a semiconductor index company, like Apple for hardware or Microsoft for tech. Nvidia, just one of the best companies in the world now, growing so fast. They have the best product, the most powerful processors and chips, so that's why I'm invested in that. But I could definitely see myself wanting to pick up both TSM and Micron. I'm probably not going to, but I know a lot of you guys have investments in those two, so have a look. Of course, these companies does many other things. They don't just make semiconductors, but some great companies. An industry definitely outpacing the S&P 500, outpacing most other industries. It has become like almost a commodity. We need semiconductors for all our electrical devices. So great space to be in. Have your pick. Let me know what you think, and I'll see you in my next video.